Good morning, good afternoon, good evening, depending on where you are in the world. I'm Nicolas Véron. It's my pleasure to introduce this new session of the financial statement series on setting standards for sustainable activities in the new world of trying to fight climate change and adapt the financial sector also to this challenge. Some regulars of the series may note that my background is not the usual one. I'm on the road. I'm in this office by invitation. It's not my office, even so I wish it were. I hope it will be as stable technically as we usually have it in the financial statement series. Our first speaker will be Lucrezia Reichlin. She's a trustee of the International Financial Standards Setting Foundation. She has a distinguished career as an economist and as a scholar in numerous areas of financial economics and also European area reform. She studied at University of Modena and Reggio Emilia and got her PhD at New York University in 1986. She worked at the Université Libre de Bruxelles as an academic. She worked at the European Central Bank, where she was the Director General of Research from 2005 to 2008. She was the first woman in that role. Maybe that's worth mentioning. She's also been a professor of economics at London Business School, which she joined in 2008 and is still with. She has a long experience in policy making and policy setting, not just at the European Central Bank, but in numerous bodies and also non-profit organizations, corporate boards. I should mention that she was a chair of the Scientific Council of Google, my other affiliation, between 2013 and 2016. She's a member of the Board of Trustees of the Center for Economic Policy Research, the CEPR, and chair of the Board of Directors of the European Corporate Governance Institute, ECGI. Lucrezia also participates in a number of corporate boards, including until recently in UniCredit, the large bank. She will present the International Reporting Standards Foundation and her work as a trustee. I'm very grateful that Lucrezia is with us today. Samantha Ross studied at Duke University School of Law, and at Cornell University, she has been working in private practice and also in the District Court of the Southern District of New York in the 1990s. She has been working also at the U.S. Securities and Exchange Commission in the early 2000s, and then during 15 years at the Public Company Accounting Oversight Board, the PCAOB, which was created by the Sarbanes-Oxley Act following Enron and WorldCom and other scandals in the early 2000s, where she was there almost from the start, or from the start, maybe, Samantha. Yes. As Chief of Staff of the first Chairman, William McDonough, as Special Counsel to Board Member Charles Niemeyer, then for 5 years until 2011, and then for most of the 2010s, between 2011 and 2018, as Special Counsel to then PCAOB Chairman James Doty. After leaving the PCAOB, the Public Company Accounting Oversight Board, in 2018, Samantha has founded her own consultancy and consortium for assurance of a number of different dimensions here on sustainability, environmental, social, and governance issues based in the District of Columbia in Washington, called AssuranceMark. With that, I give you the floor, Lucrezia, and we'll hear from you on the current projects.
Thank you very much, Nicolas, and good morning, everybody. It's a bit early to talk about standard setting, so I hope you're well awake. It is a pleasure to talk about this project today here with my hat as a trustee of the IFRS, the International Financial Reporting Standards Foundation. And as the invitation of this for this webinar says, demand from private investors and public policymakers to accelerating the process for consistent global practices of reporting climate and other sustainability related data has been increasing and more and more vocal. Now, the problem is that's nice, but how do we get there? So I want to talk to you in my 10 minutes about what the IFRS has been done in this domain. In 2020, the IFRS started a consultation, or a public consultation, to assess the demand, the global demand for establishing a global standard setter. And also to test the demand for the IFRS to step in the role of a consolidator of the many existing initiatives that are around. As you know, there are many standards that are issued by private organizations and others. It has been called the alphabet soup, actually, so many, different standards, which has created quite a chaotic landscape. So why the IFRS? Okay, we were encouraged to get into this domain by many investors. The IFRS is a well-established as de facto the global standard organization, the global standard setters for financial reporting, and the IFRS standards are actually been adopted by more than 140 countries. Another reason why the IFRS, it's an organization that should consider such project is its governance. And for those of you who are not familiar with our governance, let me just spend a few words about it. So let me start with the bottom of this chart. This is the International Accounting Standard Board, the ISB. So this is the organization which actually the technical board that issues the standards. And so what is known as the IFRS accounting standards. So this is a set of principles that the company should follow when they prepare and publish their financial statements. So it provides a standardized way of describing the company's financial performance. At the top, so this is a bunch of technical guys that independently set the standards. At the top of the organization is what we call the monitoring board. So what is the monitoring board? The monitoring board is the board that oversees the work of these guys here, which are the trustees, and who sit in the monitoring board. The monitoring board is basically public policy oversight. So the role of the monitoring board is to provide the link between the key public authorities around the world and the standard setters. So who sits there? The IOSCO, or the European Commission, the US Security and Exchange Commissions, the Chinese Minister of Finance. So mostly is security regulators, in some cases, Minister of Finance, depending on what is the national setup. And then,
and of course, Lucrezia, sorry to interrupt you, but IOSCO, of course, is the International Organization of Securities Commission. So it's also the securities regulators community, right?
You're right. So no acronyms. Okay, and so the monitoring board provide that public oversight, and the trustees, so this is a bunch of independent people, of which I am one, are responsible for the strategic governance and the oversight of the standard setters. And then we have a bunch of committees in advisory capacity. So this three-tier structure is interesting because it's kind of public policy and private sector hybrid type of structure. Now, after the consultation that we launched in 2020, we had a huge number of responses from investors, from preparers, companies, but also from international organizations. And the message was very clear. First of all, yes, there is an urgent demand for cleaning up the world of sustainability reporting and to set up a global organization that would be in charge of that. And second, there is a broad support for the foundation, for the IFRS to play a role because of a couple of advantages. First of all, the established credibility based on the fact that many countries are already, adopting the financial standards set by the IFRS. And second, because of the governance that I just described, which gives, this double, has this double characteristic of independence on one side, but also public oversight. And so based on the response and the encouraged response by the consultation, we really wanted to be demand driven and not just, saying, okay, we are another organization that wants to be in this space. So having assessed the demand, so we set up the strategic directions. And the strategic directions are based on 4 pillars. First of all, our focus is not going to be public policy because, we don't have the credibility and the governance for that, but it will be, as it is for financial standards, the focus will be meeting the information needs of investors. Okay, what do the investor need to know to assess the value of the companies and the risk associated, to climate and other sustainability issues. The second direction is that we don't want to, start from scratch. There are other organizations which have been in this field for a long time. And so we want to build from their work and collaborate with them to encourage this process of consolidation. The third strategic direction is what we call the global baseline here. So this is an approach that seeks to connect the work on standards that serve the investors, the global capital market in general, with jurisdictional requirements that can be different because countries are different because of their policy, because of their legal framework or whatever. So, so the global baseline would be something that, would serve the global capital market, but, we would connect with specific requirements, which are jurisdiction specifics. And I will elaborate on this idea further later on. And then the fourth strategic direction is that we want to start with climate. This is also what came out from the consultation, but not climate only. So we want to move to broader sustainability standards after further consultation. But given the urgency, we're going to start from climate. So let me take each of these strategic directions in turn, elaborate a little bit more. First of all, investor focus. So as I mentioned, the IFRS, the standards that we are issuing for financial accounts provide a global language to describe financial performance and focus on the needs of investors. And also, we work with multiple stakeholders around the world to ensure that these standards can be applied on a globally consistent basis, both for developed and emerging markets. So we have a global outreach. Now, if we were to establish a board focusing on sustainability, let's call it a sister board to the ISB, which I described. So this will have to have the same focus. And it's very important, this alignment is very important because financial and sustainability related financial information already overlaps and, they're getting closer over time. So this is very important, this connection. So this means that we will focus on the concept of enterprise value. So to capture the expected value creation for investors in the short run, but not only, also in the medium and long term, and which we recognize is interdependent with the value creation for society and the environment. So we start with enterprise values, but we recognize the interaction between the broader objective of creating value for societies. So the second, the building on existing framework, on existing investor focus framework, which is our second strategic direction. As I said, we do not want to start from scratch because there has been a lot of good work. Here you have the different names of the different organizations which have been active in this space. Very important role had the TCFD, the Task Force for Climate-Related Financial Disclosure, which is a task force which has been set up by the Financial Stability Board. The Value Reporting Foundation, which has now aggregated the SASB, the Sustainability Accounting Standards Boards and Integrating Reporting. the World Economic Forum, which have had initiatives on metrics, and the Climate Disclosure Standard Boards. So, so with our experience on standards and our infrastructure and the experience of these guys on sustainability, I mean, if we could achieve consolidation, that would be indeed a very powerful mechanism to have credible standard setting on sustainability. So to this, to favor this process of consolidation, in the last year, we have been working like crazy on, you know, getting prepared. And so we have set up a technical readiness working group to accelerate the convergence on these voluntary standards, which have been issued by these different organizations. And we're preparing a prototype of what could give a running start to the new sustainability board that we aim at setting. And of course, the new board will have to set standards independently, but we want to give them a prototype so that they will start with a good basis. And the second objective of this technical readiness working group has been actually to consolidate, actually to merge. And so we are in the process of merging, and you know, we're in a very advanced stage on this process, and I think this is quite good news. Now,
I'm mindful of time. I will have a lot of follow-up questions on this and other issues, but I'm mindful of time, so I will perhaps ask you to move on with the next slides of the presentation. Thank you.
Yeah, I mean, you gave me 10 minutes, right? So now this is the global baseline. So the global baseline concept, as I said, it's you know, can be summarized by these diagrams. So here in gray we have the financial reporting, investor focus, which reflect you know, is reflected in monetary amounts in the financial statements. Okay, so that's what already is provided by the ISB. This will be the new sustainability related financial disclosure board, so the sister board, which will, you know, set issues, reporting standards on sustainability-related matters that may create or erode enterprise value over the short and medium or long term. So there will be some overlapping with this work, but you know, there is also some extra bit that this new board will have to set. And then you know, the larger thing here is sustainability reporting for you know, for broader requirements which are related to public policy and that serves you know, broader interests of society and you know, larger set of stakeholders. So this is a model which you know, provides the interoperability between these two boards, but also the interoperability between the new sustainability reporting board and what the jurisdictions do to serve their own policy objective. So this is the concept, the third strategic direction. The fourth is climate first, but not only, as I said. So we are going to address the S&G at a later stage once we have established the board. Now, the proposed organization is to add this bit, okay, which the ISSB in our three-tier structure. So I talked about the three-tier structure before with the ISB. Now we are going to have another bit here, okay? So those will be the two sister boards, and you know, there will be some connection between the two. Finally, you know, to achieve, I just want to say that to achieve that kind of structure that I described before with this global baseline, it's very important to have, you know, connection with, you know, different type of organization, multilateral organizations and jurisdictions. And so we have established a multilateral working group to prepare, to do the necessary preparatory work with the idea that in the steady state, this kind of consultation will be well embedded in our governance. So I talk about the organizational structure. Let me just say one slide of where we are. So we have a very advanced stage in consolidation with other standard setters and in the production of the prototype. Several jurisdictions expressed interest to host the board location and provide seed capital. So we are conducting the evaluation. We are progressing in the search for chair and vice chair. We are, we have established this multilateral working group I told you about, providing the link for the proposed board and the broader sustainability topics. We're engaged in international organization for establishing the right level of support. And in particular, we have strict collaboration with the IOSCO, so with the security regulators and the Financial Stability Board. And we are engaging with major jurisdictions to design the cooperation. Our intention is to announce the new board at COP26 in Glasgow on the 3rd of November. Thank you.
Thank you so much. And your last slide in particular is pretty impressive in terms of how many things you have to do in parallel. With some familiarity with this kind of processes, generally they're very sequential and every sequence defines the next one. Here, you have to do everything at once, which I can imagine is very challenging. Sam, over to you.
Great, thank you so much, Nicolas. Thank you for inviting me to this panel. I'm honored to be here, and I'm really honored to be speaking alongside Lucrezia and all the, hear about all the amazing work that she's been doing. I'm old enough to remember when Paul Volcker was on the chair of the IASC, the International Accounting Standards Committee, back in the late 1990s, early 2000s, and was setting up the IASB, International Accounting Standards Board, and that which is in Lucrezia's slides as if it's been around forever. But it happened because of initiatives like what Lucrezia is leading today. And it doesn't happen without visionary people like Lucrezia. So, on behalf of the public and investors, I really appreciate all of that work. So as I say, I'm a huge admirer. I think the plan is extremely ambitious and also at the same time, exactly what we need. Just thinking back to the strategic directions that Lucrezia mentioned, the strategic decisions, the investor demand is real. Companies feel it in that, I hear it from investors all the time, that the current, first of all, this immense demand for sustainability information, as well as immense frustration with the kind of hodgepodge of disclosure that's out there today and the lack of consistency inside a company, the lack of comparability across companies. The basic infrastructure that financial markets use to analyze data, and actually the engine of the markets is information, that we can't really even do that today with the sustainability information that we have in its current framework and its current, it's just too dispersed. Saying that, I know there's a question coming up in the chat about this question. I thought it was something important that we should touch on too, and it relates to investor demand, but it is this question of how related sustainability disclosure is to financial disclosure. And I really love the chart that Lucrezia puts up showing the IASB next to this new International Sustainability Standards Board. I think that is a real advantage that the IFRS Foundation brings to this project that no one else could, because to my mind, it's incredibly important that you link the sustainability reporting to the financial reporting. Today, one of the biggest problems we have, people don't necessarily always talk about it in these terms, but some do, and it's the lack of a through line. When you read sustainability reporting today, and then you read the financial statements, which you should be reading both, it sounds like in many companies, it sounds like you're talking about two totally different companies. I mean, you have no idea how to reconcile the information. The disclosures themselves seem quite different. The assumptions that the disclosures are based on seem quite different. This is absolutely something that a group like the IFRS Foundation can get into. And actually, I think it will improve the quality of financial information by making sure that the assumptions that companies are using in building the financial statements are real, take into account a whole bevy of risks that in the past had not necessarily been taken into account. This is not actually new. Throughout the 20th century, we came to be aware of new risks. We incorporated them into the financial statement preparation process. I think, with technology and with the information economy that we have today, that's just accelerated. And that's why we have this big bump of what we call today sustainability information, but it absolutely has an impact on enterprise value, as Lucrezia says, and it has an impact on markets and on investor decisions. That's just not me. That's not just me saying it. There's a wealth of research out there on this topic. For example, my old friend Christian Leutz has a really wonderful, massive survey paper out now on sustainability reporting, finding that sustainability reporting does affect prices, that investors do react to the market does react to sustainability reporting, that it affects investor decisions, both on buying and selling stocks, as well as, very importantly, I know Lucrezia didn't really touch on this because she didn't have a lot of time, but on voting, which is incredibly important, proxy voting. And in addition, it affects companies' cost of capital. There's, like I said, there is a host of research out there about that. So I think that that's why we're seeing the investor demand that Lucrezia is talking about. This isn't just investors saying, "Oh, I'm now interested in these topics for my own personal reasons." It's because markets do move on this information. Now, I also wanted to mention a couple other points about the strategic direction that she talked about. I think it's great that it's building on, the existing frameworks and that are out there. It's not surprising that we have, to me, it's not surprising we have a lot of different frameworks. That's a sign of the investor demand, but it's very important that someone step in and create a framework that can be used more consistently so that there can be comparability across companies. Because even if there's good reporting, it's almost impossible to be able to compare it to peers, or even, to be able to compare it inside the company as, changes may happen. Now, this notion of global baseline, I think that's incredibly, very interesting idea. Having lived through the convergence process, I don't know how familiar the audience is with that, but for probably 15 years or so, the US accounting standard setter, the Financial Accounting Standards Board, which sets generally accepted accounting principles that we use here in the US where I'm located, and the IASB, once it came into formation, very soon after it came into formation, there was a massive effort to try to converge the two standards so that we would have global consistency. It required tremendous time and attention of both those two boards and their oversight bodies and the regulators involved, like the Securities and Exchange Commission. Very costly because it took attention away from other projects that both boards were working on. And in the long run, we weren't able to achieve it. Now, there may be idiosyncratic reasons why convergence was not achievable, because GAAP was long in existence. That's not the situation that we have today with sustainability, so maybe things would be different. But I do think it's smart to step back and think of a totally new approach of global baseline. There are precedents for that. I know in our country, in the US, where you have standards that one body creates, and then another body can, write standards on top of that. So I love this idea of baseline. We'll see how it ends up working in practice. Obviously, many a slip between cup and lip as things get going, but it's a great idea, I think. And I also agree with Climate First, because I think that's where we have actually the most, sophisticated analysis about the linkage between climate risks and, both physical risks and transition risks with financial reporting. So I think as an exercise, it is a great way to start the framework because we already know about the linkages and also obviously the urgency. So all of that I think is extremely important. Now, one more comment I just wanted to leave, and then I know we'll have a discussion. And this is not at all to, the work is just amazing and so ambitious, and it's just amazing that the IFRS Foundation has stepped up to do it. Now, an important point that I know Lucrezia didn't get a lot of time to cover, she briefly mentioned, the announcements that will come out in November, and that the organization is looking for seed capital. Of course, that's extremely important, that you need the funding to make the initiative. These things don't happen on their own. It's not volunteer efforts won't be systemically impactful, and which is what we've been depending on so far for all this time in sustainability. It is expensive, and who's going to pay for it is going to be a big issue. Here in the US, we've had a lot of experience with ups and downs of funding process, and eventually the Congress decided that it was very important to have nationally funded independent standard setting. Obviously the challenge when it's global is so much bigger because you've got all these different jurisdictions involved, but it's going to be incredibly important, I believe, for the success of the initiative that the organization create and obtain independent funding that's robust enough that it can have full-time board members, so there aren't any conflicts of interest, as well as, the people can be truly full-time focused on the important work. I'll stop there. I know there are lots of questions.
Indeed, we already have a number of questions. Of course, you can, the audience can ask more questions in the Q&A. We also have a chat open, but we encourage the audience to use the Q&A function. Let me just pick up on where Sam left us, Lucrezia. What is your concept for fundraising and how do you approach it?
Yes, I mean, I totally agree on what Samantha said. So we are looking at a permanent concept of financing, so of kind of financing for the long term. And this is going to be both private and public, as it is, okay, you're ready for financial reporting. But on top of that, and this is why I stress the seed capital, I cut, to be mindful of time. The seed capital, it's important to get started. And there is a sense of urgency that that really we feel, okay, so that we need to speed up. Of course, we should not compromise the quality. So the seed capital, what we have been thinking about seed capital is that the board will have a multiple locations. So because we are a global organization, and so we have a competition ongoing for different cities around the world which have applied for becoming the location for one of these boards. And so the process is ongoing, but I can tell you that it has been quite impressive how different cities have been put together, a very convincing mix of people, which includes universities, private sectors, public policy, and so on. So an hybrid, okay, so that...
How many offices do you aim at creating?
Sorry?
How many offices do you aim at creating in this process?
Well, I mean, I cannot, it's still rather confidential. So this will be announced very, very soon, but, more than one. Okay. So more than one. And we want to be, to have a real global outreach. Now, in terms of who is going to sit in this board, okay, the concept of independence is extremely important, so that there is going to be a process which, transparent and so on, and we aim at having 14 board members, which from different geographical locations, but they will be selected on the basis of their expertise. Now, what we are looking for is a bunch of different expertise, okay? Because this is not just the financial. I mean, we need also people which have some background on sustainability and so on. So we are looking at a range of different, but it is the chair and the vice chair that will set up the appointment process for the board members. The trustees now, we are just concerned with the appointment of the chair and the vice chair. And, there is a process ongoing. So we have, already got quite a few applications, which are very interesting.
I guess I shouldn't ask you who they will be, because that's probably premature. We have a question from Carlos Carpi on the interplay between these different missions for the IFRS Foundation as a whole, because you are already in charge of financial accounting standards, and that's a tremendously important work. So Commissioner Pierce, as Carlos reminds us, one of the commissioners of the U.S. Securities and Exchange Commission, the SEC, has recently commented that the sustainability standards effort might undermine the foundation's current important investor-centered work. Do you see a trade-off here? I mean, basically what you, Lucrezia, and you, Samantha, told us is that there is a synergy between, sorry for the background, there is a synergy between the two projects, the existing project of financial accounting, the future project of sustainability reporting, but could there be also some negative interferences in which the sustainability work makes your historical core business of financial accounting standard setting more difficult? How do you see it? And can you give us a sense also, I imagine, of the past debates among the trustees, because I imagine that you have debated that question before making the decision to create a new board.
Sure. Well, Samantha has already made some very good points. I mean, I think the synergy is very important. I mean, the world has moved on. Investors want to have that information. Actually, I think there is also a risk that if we don't move into that area, there will be, some risk for, the credibility of the standards for the financial accounts. But it is we are very mindful of that risk, and it is important that from the financial point of view, the resource point of view, the establishment of the new board will not, squeeze out resources from the ISB. So in that sense, the project is advancing at a very careful pace because, we want to protect what we have, of course.
It's not only a question of resources, right? You told us about financing, but there is also the possibility of, political issues. I mean, there have been political debates about some of the past work of the ISB and the IFRS Foundation, on fair value accounting and a number of things that at some points became very contentious in some jurisdictions. Could it be that the enormously politically contentious nature of sustainability reporting, even if you have this investor orientation that you explain, could undermine some aspects of the rest of what the foundation does? Sam, how do you view this before we ask Lucrezia about that?
Yeah, so let me just say also one thing about the point that you just asked about the intersection of financial reporting and sustainability reporting. There's also ample research that in financial reporting, we've sort of been creep over the last 30, 40 years, where we've seen a very, to date, large disparity between book value, what the financial statements say the value of the company is versus market value. And there've been a lot of initiatives to try to understand what's inside that gap. I mean, part of that gap could be a bubble, right? So we really want to know, is it a bubble or is there something, an actual value associated with the company that explains that difference. And both boards have had projects on things like intangibles. I know, especially here in the U.S., but also International Accounting Standards Board has been very cautious about valuing things like intangibles that obviously exist, brands, patents, human capital, but are harder to measure. Personally, I think this effort to establish sustainability standards wherever it's happening, but including the effort that the IFRS Foundation is involved in, is implicitly an effort to address that gap. And if we don't address that gap, we are seeing a weakening in the relevance of financial reporting. So I think, in response to the question of, is this a distraction from financial reporting and financial reporting standard setting, I think it's the thing that will save financial reporting and continue and enhance the relevance of financial reporting. I do think that the through line is going to be incredibly important, and so we're global. It's so easy to work, because of technology wherever you are. I understand what Lucrezia is saying about having different locations in different cities. That sounds like that's a great way to get talent and get interest. But it is going to be, and I'm sure they'll be thinking about this, how do you make sure that those two boards understand each other's work, that they aren't separate? Because that's really the innovation that's, that this project holds the promise of. So Nicolas, your second question.
Can I also make a point on that one?
Yes,
I think that, this is why we are focusing. I mean, I totally agree on what Samantha just said, and thank you for making that point. Another point is that governance is everything, like in everything, this is why.
And indeed, I mentioned Commissioner Pierce of the SEC, as cited by Carlos Carby, and apparently one thing he said is that the project raised a serious governance concern. So that's I'm not endorsing necessarily that view, of course, but really, if you can give us a sense of how you address any trade-offs here, because they can be quite powerful.
Well, I think that you can make the case that as Samantha just said, that that there is a case to broaden up the scope of our work, to provide a kind of connectivity with the ISBs, also to protect the meaning and of financial reporting. Already through the management commentary and to other tools, sustainability topics are getting into the world of the ISB. But there are other things which are not, like, for example, the forward-looking information that it's important for assessing, risk related to sustainability. Now, so the reason why the IFRS has gone into this area is exactly because we think that through our governance we are credible in protecting independence, and to have, both the investor focus, the investment focus that I talked about, and at the same time, the oversight by the security regulators and the public policy bodies. So I think that that's a guarantee of the independence of the work. Of course, nothing is ever perfect, but, for everybody who says there are governance concerns, because we are also, seeing criticism about our governance from a completely different perspective. Because, for example, in the European Union, there are some countries that think that actually standards should be entirely a public policy, oversight, just a public policy goal, okay? So that because, for example, within the Green Deal, the European Union has set a number of targets, and then the standards are just part of this broader project. So what we are...
I guess this raises a fundamental question, right? I mean, basically what you're saying is that you're pulled in all kinds of different directions by different stakeholders. You have investors, you have the SEC, or at least some commissioners who think that you should really be focused on what investors need. You have the European guys, including France, as you mentioned. I guess that was my country you mentioned, which insist on having public policy represented very powerfully and directly into standard setting. So that kind of raises a question: is it possible, or have you given yourself an impossible task? What makes you confident that you can do it?
Well, we have been endorsed by with the welcoming statement by the Minister of Finance of the G7, by the Financial Stability Board, by the G20, by the IOSCO, and we are working, and the IOSCO is very important because the IOSCO is what would make it possible, because, one thing is to set the standards, then the standards also have to be implemented, and we know that implementation, it's important, and to have the support of the IOSCO, it's what makes us, optimistic about...
If you allow me to follow that thread, and there are already tons of questions from the audience, so I really hope we will be able to address at least most of them. But just on this, the organizations you mentioned are global organizations, right? The IOSCO, the United Nations, the Financial Stability Board, and the like. At the end of the day, as we know from the experience of IFRS, the financial accounting standard that has been so successful in many ways, what matters is individual jurisdictions, right? I think there is a broad agreement that the endorsement of IFRS by Australia and then especially the European Union was critical in triggering their adoption by most constituencies, most jurisdictions around the world, even so that remains incomplete, of course, because the US hasn't joined yet. So that kind of raises the question whether jurisdictions will be able to overcome the kind of political issues that we're debating. And I'd like to hear both Samantha and you, Lucrezia, on this. Samantha, maybe we can start with the US.
Yeah, so I mean, you're absolutely right. I think what really helped IFRS, once they built it, right, it had to be built first. And remember, that was the effort that Paul Volcker was involved in. They had to build it first, and then the European Commission said, yes, this should be good for all of Europe, and the member states were involved. And then, you got that really important endorsement broadly across Europe. You didn't have the same kind of endorsement here in the US, although the US does accept financial reporting filed under IFRS. Even the
non-US companies.
Only on non-US companies, correct. But there are a lot of non-US companies, and investors in on US exchanges are investing in non-US companies. So there's a lot of analysis. I mean, the market is reacting to IFRS. I don't work at the SEC anymore. I don't think that is, I don't see that question about whether IFRS should be adopted as an equal standard with GAAP in the US. I don't see that on the table, but, I don't work at the SEC anymore. I don't know what they're talking about there. I do know that my old institution, Public Company Accounting Oversight Board, when we went out and inspected the work of auditors, we inspected the work whether they were, auditing against US GAAP or against IFRS, because if they were filing in US markets, PCAOB inspected the work. And I think that was a very important kind of, rigor and discipline on both GAAP and on IFRS. I wanted to mention something else too. There's a really important point that Lucrezia just mentioned, and she mentioned forward-looking information. And I think there's a kind of, which I absolutely agree with the point she was making, but I think that out there in sort of the public, there may be a misunderstanding of thinking that somehow financial information is really concrete and is about the past and historical cost, records, receipts, whereas sustainability reporting is about the future. Is the planet going to change because of climate change? How can I predict? I'm not a meteorologist. How can I predict the climate? That is absolutely not what we're talking about. I know Lucrezia is not talking about that. Actually, today, I believe that the financial statements, whether you're talking about GAAP or talking about IFRS, these are different in this respect. They're both all about forward-looking information because they're both based on estimates of future cash flows. They're filled with estimates. Fair value is an estimate of what a value is based on future cash flows. Sustainability, in fact, there's some forward-looking information, but there's a lot of past information, like what emissions occurred in the past period. So I think that forward-looking information is embedded in our current financial reporting system. It will obviously be there in sustainability. It's really important that you have good disciplines to make sure that those estimates are accurate through auditing, through regulatory oversight, regulatory review, and that's why IFRS has been, I think, so successful today.
Lucrezia,
on the jurisdictions.
On jurisdictions, on the US and on the European Union, and also on China, actually, to start with the biggest ones.
Absolutely. I mean, this is, I just want to insist on this concept of the global baseline. Okay, so the capital market is global, but, policies and legal frameworks are national. So it is inevitable that country will diverge, will not have the same standards, not exactly the same standards, but it's very important that, whatever it happens, is going to happen at the, the level of the different jurisdictions. It's nested so that, it is not, non-congruent with the global baseline that we are proposing. So we know already that also this is true for financial, that countries have a variety of mechanisms for integrating for financial reportings in the national systems. So there is enormous flexibility for jurisdictions to integrate them into the national systems. And for what concerns especially the European Union, because the debate in the US is quite different, what is important is that whatever, correspond to broader public policy objective is a top-up of what the global baseline is. So which begs the question, okay, so can we collaborate on the definition of the global baseline? What are the mechanisms through which we favor this process of convergence. And we are actually, working very closely with IFRAG, which is going to be the standard setters for the European Union, but also with the SEC at the technical level. And to tell you the truth, okay, this is kind of a little bit of a macho game because, everybody's working on the same concept because there has already been quite a lot of work by the SASB, the TCFD, and so on. So our work on the prototype, it's already, there is quite a lot of convergence of opinion of where we should start, okay, from. And the governance is a different thing. The big countries especially are very afraid that, they do not want to delegate authorities to us, but this is not what we are asking. We are not asking for delegation.
At the same time, there are also differences, right? If I understand, you mentioned EFRAG, the European Financial Reporting Advisory Group, if I remember the acronym correctly. And they're working on a concept which in the jargon of this area is called double materiality, right? They want to the companies to report both on the risks that climate change creates for them, which is kind of the kind of mainstream investor focus that you're also working on, but they also want to work on the risks that the companies generate for the climate, their impact in terms of global warming, emissions, and the like. If I understand your concept, and correct me if I understood it wrong, which might be the case, you're not really in that framework of double materiality. You're more driven by a focus on the risks for investors, for companies, and therefore also for their investors. So basically what climate change will do for the company, not what the company will do for climate change. Can you give us, we have also a question from Alexandra Palinska on this. Can you give us a little bit of your thinking on this issue of double materiality and whether you think that this gap can be bridged between the approach that is now, seems to be the approach of the European Commission and EFRAG and the approach that you're taking at the global level?
So we call our concept dynamic materiality, and dynamic materiality means that there is an interaction between what is material for investors and what is material for society. And also this is evolving because the preferences of investors are evolving. In fact, this is a very important, interesting topic in finance, okay? So that preferences are not fixed and investors have moved quite a lot. But we cannot join the concept of double materiality because we don't have the governance for that. We are not a public policy body. We are, and countries are different. Okay, so the European Union has a set of objectives in terms of climate target, which are specific to the European Union. And this is great. Okay, so I'm all in favor. But, us as an independent organization, we cannot set standards for public policy objective because we have a bunch of different 140 jurisdictions, right? So the question...
Isn't it also the case, Thomas Dorn has a question about the fact that this issue of sustainability footprint, so for example, contributions to global warming, this is interesting to investors as such, right? Because there are an increasing number of investors who are caring about impact and their contribution to public good parameters. So
can I speak to that for a second?
Is your point, sorry, I'll give you the floor, Samantha. Is your point that investors actually have that discourse in public, but they don't tell you that they would like your standard to give this sense of impact? Or can you give us a little bit of the sense of that? Maybe Samantha first.
Well, let me just speak to that. So Lucrezia mentioned the important idea that investor preferences evolve, and they absolutely evolve because our entire market has evolved. If you looked 50, 60 years ago, it was largely our markets were characterized by retail and massive amounts of dispersed retail investors. Today, we have much more institutional investment, and also the retail investors have come together through indexing, right? So the concept of indexing means you're investing actually in all companies, even if you're a retail investor. So of course, materiality is going to evolve along with that. It doesn't matter what you call it, even if it's just straight, the straight old-fashioned kind of materiality. Investors today want to, need to know about, the overall impacts the company is having because they are concerned with all of their investments, right? They want to know that they're not, investing in one company that's going to then be, essentially causing some kind of imbalance or harm in some other industry or some other, future effect on other investments. So you know, it's not like companies are required to report on other companies or their role with other companies, but this notion that the markets have dramatically shifted, and today we have indexing, today we have much more institutional investors that are in all companies. Of course, their information needs are going to shift. And I think that's, you know, the point that, you know, this enterprise value that Lucrezia is talking about is that kind of, you know, medium-term balance.
I think, Nicolas, for you who are in financial regulations, is like microprudential and macroprudential. Okay, so that, you know, the interaction, because what is relevant for the company, what is relevant for in the environment is there, and everybody is mindful of that. So
sorry, I don't get that. Investors are not in microprudential regulation. Regulators.
No, but when you said the standards, I mean, when you know that we know that when you assess the risk for a bank or for a financial institutions, you know, to a certain extent, this is for the institution, for the single institution, but then there is a correlation of risk.
I guess that's exactly the point that these audience members have been asking. Is it utopian to think there will come a point when investors themselves are asking you for double materiality if they aren't asking you already?
Well, they already are to a certain extent. This is why we think that, you know, our standards will evolve with the assessment of enterprise values, which includes to a certain extent the other side of the materiality. I think that it's a very, I mean, it's an interesting debate, but it's very abstract. I mean, when you go and get, as I said, when you go and look exactly at the standards as they're also being developed by IFRAG, the difference is not enormous. Maybe there is a difference in the taxonomy, because the taxonomy is related to public policy objective. And this is why the
European Commission's taxonomy,
the European Commission
which has been adopted,
you know, has a very clear plan on the taxonomy, okay, but when it comes to standard, I think that, but of course there will always be some jurisdiction specific, you know, requirements. The important thing is that they will not come from the moon, okay, but they will be like top up of the global baseline. Otherwise, this will be a nightmare for preparers, okay, so that.
There's another point we actually haven't touched on too here, which is that the point of much of the point of reporting is so that investors can understand what management is doing, so they can evaluate management's success or failure, and then you know, reward or punish management accordingly. And so with reporting, like I mentioned, you have that big gap between book value and market value. What investors want to know is when management is successful, is it because management was good at managing the assets of the company, including the assets that are on the books, as well as the assets that are not on the books, like, for example, human capital? Are they good at managing that? Or is the success of the company, the financial results and the current position of the company, is it based on exploiting some other resource that wasn't within the boundary of the company, but was somebody else's resource that that management, you know, had an opportunity to exploit, but, you know, wasn't really using the assets of the company? That's what investors want to know, is this manager good at managing this company, not at, you know, sort of taking from other, you know, for free from other, you know, opportunities.
That's an externality.
Questions, and we're getting close to our close, actually. But I want to ask you two questions to finish. One is, there's a very interesting question from Sila Mohanty, which is about sector-specific versus sector-neutral standards. And in financial reporting, in financial accounting, so ISB has been pretty good with some qualifications at keeping their standards not sector-specific. So they are there across the board. There is not a separate framework for this or that sector. Is it an approach you think you can keep for sustainability, or given the nature of the different mandate, do you think you will inevitably come to sector-specific standards, which you don't have for financial accounting? And the last question, which will be for conclusion, because we're very close to that point, and actually I will ask you to make very crisp responses to those questions because we want to finish on time, is asked both by Alexandra Palinska and by Severin Vadon-David. How long will it take? When do you think you have a stable platform, to use the word that has been used for financial accounting that covers the scope you want to cover on sustainability? Is it a matter of years, decades? What is your target date? Maybe Lucrezia first, and we'll give Samantha the final word.
On sector-specific, the prototype that we are defining will have sector-specific standards. Question one. Question two, we are planning, if everything goes, according to plan, then we'll be able to issue standards at the end of the first half of 2022.
I would say comprehensive for the whole scope of what you want to cover, or will be
no? I mean
just
for climate.
Okay.
Okay.
So first of all, we do have sector-specific financial reporting. It's not true that we don't have financial sector-specific. We, at times, investors get very frustrated sometimes with all the exceptions or unique applications to different sectors, and we'll have a massive change, and we'll take out a lot of the guidance, and then we'll have general again, and then a few years later we have more sector-specific guidance. So that's just been a constant building and creation and destruction within financial reporting for the last 100 years. But I will say investors do want sector-specific information, certain kinds of information in order to compare to peers in the sector. I mean, that's a perfectly legitimate ask, and there's no reason for that to go away. The exceptions that are made on individual sectors that they just don't want to apply the standards, that's probably going to come up in sustainability reporting just as it has in financial reporting, and should be discouraged, but it's a fact of human nature.
Samantha Ross, Lucrezia Reichlin, thank you so much for the dialogue. I feel we have only scratched the surface compared to all the different questions that I and other members of the audience wanted to ask. We have a very challenging question from Andres Portilla, from Catherine Martin, from others. So we will need to organize more sessions on this issue. And I want to both thank you very much for your participation in this session, and also wish you the best for the continuation of this project, which I think you have convinced us is really important. Our next session will be on October 15. We will talk about China and all the current developments in China and how to look at it in terms of investability. In the meantime, thank you very much for watching Financial Statements, and I look forward to seeing you again on this series. Thanks again to Samantha and Lucrezia.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye-bye.